So I think we are live. Let me check on YouTube. Let's see if we are live, but I think so. Yes, we are live. And yeah, as always, guys, welcome to another live stream on the FRENS Validator YouTube channel. Of course, we are waiting for new people to join. And in the meantime, please let us know if the mic is working properly, all of these things. That would help us a lot. But today we will talk once again about MEV. The MEV series continues on this channel. And today I have the pleasure to talk to Magma and Barry from Skip Protocol. Hey guys, how are you doing? Such a pleasure to have you on.
Yeah, thanks for having us.
Yeah, and before we dive deeper into the conversation, it would be, I think, very useful because you're for the very first time on this channel. If you could both give us like a quick introduction of yourself and then maybe talk briefly how you founded Skip Protocol.
Yeah, definitely. Barry and I have been friends for a long time. We went to school together, studied computer science in the States. Before that, I was the CTO and co-founder of a very early NFT marketplace called Cent. They sort of infamously sold the Jack Dorsey tweet for 2.8 million. Maybe you saw that somewhere in the news. And since then, I've spent time at Bridgewater, which is like a large hedge fund, and then also at Atlassian building our favorite tools, Jira and Confluence. And yeah, that's sort of my background.
Yeah. And I used to do machine learning research, mostly reinforcement learning stuff, trying to automate negotiations. And I went to a hedge fund as well, D. Shaw, based out of New York. And I was on their venture studio team where I helped build out new startups, come up with ideas for new startups, and then sort of build initial tech product and team. And Magnus and I worked on a ton of side projects together in crypto over the past few years, some profitable, some not so profitable. And one of them that sort of led us down the MEV rabbit hole was sort of doing rare NFT sniping on OpenSea back in the day, sort of before Flashbots and then early after the Flashbots launch. And it was profitable for a while, and we learned about MEV, and we learned about sort of like the games people play in the mempool and the importance of latency and other things like that. And we made a little bit of money, and then it just got extremely competitive. But the big thing it taught us is that the way you design your mempool has a pretty significant outcome on sort of who can and who can't make money on your chain, and the effects that has on chain user experience. And then we fell into Cosmos through Terra. Originally, we got invited to a Jump Terra hosted hacker house by Natalie Liu, who is the head of ecosystem over there, who's a good friend. And we realized that Cosmos had a lot of first come, first served mempools, and that was sort of the standard design of Tendermint. And we'd seen the effects that had on Ethereum back in the day. Before Flashbots, we saw that price gas auctions were coming to Cosmos as well. And we thought it would be a good idea to try to build something similar to Flashbots with some important product differences that maybe we can get into. And that was sort of how the story started.
Yeah, and then just continuing a little bit off of that, we won that hacker house. We deployed a working POC of basically like a marketplace for MEV within any Cosmos chain. And then since then, we've been building on this narrative of, okay, like Cosmos is very opinionated about how it wants its independent chains to run, right? Osmosis has feelings about how it wants to run. Juno has feelings about how it wants to run. How can we bring like MEV to each chain in a way that it works for them, right? Whether they want proceeds to go this direction or that direction, how they want those incentives to be designed. So we're a lot more flexible than Flashbots. We deal in a completely different ecosystem with many different players and many different opinions. But one opinion that's kind of shared, I think, across is we don't like sandwiching or front running. We personally don't also, having been sandwiched in mempools. And so it's something that we built right from the box as something that we prevent.
Yeah, and we will dive deeper into this very shortly. But I remember we had a nice conversation with Sunny very recently about MEV, and I think it always makes sense to just reflect very briefly on what MEV essentially is all about. So before we dive deeper into the negative aspects or into the positive aspects of MEV. Could you maybe elaborate very briefly what MEV essentially is from a block space perspective?
Yeah. So the way that I define it is that block space is limited, and different positions in a block might be worth more or less, right? And as a result, some people are willing to pay more to get certain execution locations, either at the top of the block, or back of the block, or before certain transactions or after certain transactions. And the ability to reorder transactions or to have some control over where you end up in a block or what block you end up in can create the opportunity to run pretty advanced trading strategies that look a little bit like some traditional high frequency trading strategies that folks like Jump and Hudson River Trading do in traditional finance. And the thing that is, I think, unique to crypto versus some of those more traditional locations is this idea of atomicity, is the idea that you can have multiple legs of a trading strategy all run by all being committed to the same block, or none of them run at all. And that opens up a whole new world of things that you can do in crypto that you can't really do in the traditional finance world, that are much, much harder to do there. And sort of who has the ability to reorganize blocks, how they reorganize them, has a lot of effects on users and on protocols that we can talk about. But that's kind of how I think about MEV.
Yes, and then the term, I remember the first time when MEV became popular was after the blog post about whether Ethereum is a dark forest or not. I found this very interesting because it was very focused on the bad aspects of MEV. And then you popularized the meme between good MEV and bad MEV. So I think now it's a good time to dive deeper into that. So why is, in your view, why is there bad MEV and good MEV?
Yeah. So, I mean, most MEV is basically just arbitrage, right? So arbitrage is basically essential for assets to be priced properly across different pools and exchanges. You wouldn't want a vastly different price of Juno and a different one on Osmosis, or between Osmosis pools, that kind of thing. And the people who capture that, right, they get some amount of value, and it adds up quickly. So in Flashbots, it accounts for the majority of the revenue that searchers earn using Flashbots. In addition to that, there's like liquidations. So, Aave, for example, wouldn't function without liquidations. Anchor wouldn't have, any other lending protocol requires that, and they open endpoints to searchers in order to basically encourage them to liquidate bad loans and keep the platform healthy. So those two forms of MEV we consider to be pretty harmless in comparison to things that we consider to be basically purely value extractive. So front running and sandwiching we consider to be quite negative. Basically, when you get front run, you say, okay, I'm willing to pay up to this price for this asset. Someone sees that and says, okay, I'll make you pay that price for that asset. Even though it's not the current price, I'll do a large buy order before you so that I pump the price so that you have to buy into me. And then a sandwich is right after your transaction, I'll sell on your price, and then I'll make the difference based off of your willingness to pay. I mean, there's like lots of arguments about, okay, maybe this is good for LPs or something else. But I think in the reality is if you get sandwiched or you get front run, it's just a pretty negative experience. So we generally don't allow for bundles that have those kind of models. So for example, we don't allow for bundles that have like, let's say your transaction and someone else's transaction, or your transaction and someone else's, and then yours again. But what we do allow for are generalized backrunning bundles, and then also things that enable arbitrage and liquidations. And there's still a lot you can do there, but basically we consider it's like, when we came into this ecosystem, we knew that there was a lot of feelings about MEV, right? A lot of people were convinced that it wasn't happening. We sort of changed as soon as we dove into the data. We're like, no, it really is happening. It's just happening with like all of this spam. And then once we convince people that, it's like, okay, maybe it's happening, but we don't want it to happen this way. So we're like, okay, we can build with those preferences in mind in an ecosystem healthy way.
Yeah, totally makes sense. And I remember a keynote held by Sunny at Nebula, where he also pictured this very well. But I'm trying to wrap my head around this because for me, MEV is like actually very neutral. It's just empty block space that you can use. So it's kind of an innovation, so to say. So why do you see this urgency to basically popularize or move or push this meme to say here is good MEV and bad MEV? So why do we need this meme, so to say?
It's a good question. I don't know if I would say we need it. I think it's been helpful to have more involved conversations about MEV. It was sort of something that we started talking about accidentally, just because we were witnessing how people were reacting. So one thing we found is different groups of people tend to have very different feelings about MEV. And it's not like a monolithic thing, but when you describe it as a monolithic thing, then you only get the knee-jerk reaction that they feel relative to the experiences they've had. So for example, when you talk to traders who've been sandwiched a lot and you say, oh, like we're building an MEV marketplace, they're like, oh, what the hell? That's horrible. That's going to be bad for me. And when you talk to searchers and you say we're building an MEV marketplace, they get really excited. When you talk to validators, the question is actually more subtle, right? It's like, okay, wait, what kinds of MEV? And I think it comes from the fact that validators, unlike miners in the Ethereum world, actually view stakers as their customers. And they recognize that some people have felt like they've been hurt by being sandwiched or being front run, but they also recognize that, okay, here is a new potentially non-inflationary source of revenue, not just for me, but also for my stakers that I could use to make my community better off. And so then you get to this subject of, okay, what kinds of bundles do you allow or do you not allow? And what ones am I okay with as a validator? And I think that's really where it came from for us, was just responding to that feedback and seeing that division of opinions. And it's also been helpful too, because like I'm not, 100% sure that we're right about this or right in all cases. There are cases when front running in Uniswap actually gives people better execution prices. And so it's not a cut and dry, it's not a black and white issue, but I think the meme has been helpful for us having a more thoughtful conversation with people about it.
Also, just one thing that we want to enable going forward is, we have individual conversations with ecosystems, right? So I think in the future, what we want to have is the kinds of MEV enabled by a chain can be governed by the community. So we could vote and say, okay, we don't mind sandwiching. I don't know why you would ever say that, but we don't mind sandwiching. We don't mind front running. But I think more likely what you'll say is, okay, we don't mind arbitrage and liquidations. It's necessary. And we want to share in the revenue of that as stakers, because all this money at the end of the day mostly goes back to stakers. But we want to prevent these other forms, right? So like Osmosis, I think had a good sort of shift in opinion around this. It's like, we don't, the things that we didn't like and why they said they didn't like MEV is because I think they're reacting more toward the negative parts of it. So like this front running sandwiching, which it's not nice to have on a DEX. Whereas like the other parts, the arbitrage, like that's revenue that is generally healthy, and that can be directed back to stakers instead of sort of individual bots capturing all of it.
That's a very good point here, and we will definitely also dive deeper into what MEV could bring to validators and to stakers, because there's also a lot to unwrap here. But before we do that, I think another very interesting part of this discussion is basically how we generally give people access to MEV. You mentioned it, MEV became very big on Ethereum first, but it was a very inaccessible market, so to say, for most of the people. So you need to be a miner or a well-experienced MEV searcher to basically get take advantage of this lucrative market. So my question is, you are trying to change this a little bit. You're trying to make the access to MEV a little bit easier, so to say. So what is your go-to-market strategy? So what kind of end product can we expect from you guys in order to bring MEV to the masses?
Yeah, so if you think about it on Ethereum, like the people who MEV Geth and Flashbots brought a lot of the revenue to the miners, right? And the reality is like most of us aren't. Most of the Ethereum users aren't miners themselves. I was, but there are many people who are not. Whereas it's very different on proof of stake chains, especially Cosmos, where a lot of us are staking. Like the users are oftentimes staking their tokens with different validators. So what we're building basically redistributes a lot of the MEV revenue to validators and therefore to stakers in the same sort of path where validators earn block rewards and they share it with stakers, the same model. And then we're going about this in two ways. So our first product is a single chain client, which creates an MEV marketplace where searchers, people who are going for MEV opportunities, compete with each other in an auction, a fair open auction, and the revenue of that auction goes to the validator and their stakers. So for example, let's say there's a large arbitrage. Some of these arbitrages are worth hundreds of thousands of dollars, especially on Osmosis. You can imagine that multiple bots will pick up on this. And so someone says, okay, I know this arbitrage is worth $100,000. I will pay $10,000 for you, the validator up next, to capture it for me. The validator says, okay, but then someone else comes in and says, I want to pay $20,000. And because the arbitrage is riskless, because it's an arbitrage, you can expect that competition will go up to 90, 95, 97% of the value of that arbitrage. And sort of we're deploying this on different chains where there might be different strategies too. And then all of that revenue goes to the validator and is shared with the stakers. What this generally does is it sort of pushes searchers to be more creative, to instead of just relying upon like the big opportunities, they sort of go and they find new ways of capturing value, which is generally healthy for the ecosystem and sort of spreads that intellectual power around. After we've deployed this single chain client on different chains, what we want to do is start thinking about, okay, how do we start routing transactions between and routing bundles between to capture cross-chain execution. So if you found there was a mispricing in, let's say, Juno between Juno natively and then a bridged version of Juno via IBC on Osmosis, how do you atomically execute a swap on both so that you can capture that opportunity and get, let's say, a flash loan or instant liquidity to do that? We think that's a huge opportunity. And it's very hard right now, given sort of all the different security models and the different block times of the different chains to do that coordination. But we have like a lot of internal plans in terms of how we can start to do that based off of our single chain client. The last thing I'll say just quickly on that is one thing we haven't solved as an ecosystem is how to incentivize IBC relayers, right? So these are people basically nice to us who are relaying these packets between because they want to support the Cosmos, but they're not generating any revenue from doing it. Literally none. In fact, they have to pay for the transaction fees on the destination chain they go to. One incredible way to do that that's non-inflationary would be MEV. Since they play such an important part for relaying cross-chain packets, cross-chain MEV can be used to incentivize them in the same way that we incentivize validators to continue to run that infrastructure. So that's sort of how we envision the single chain client to the multi-chain client and having IBC relayers incentivized in that transition.
The only thing that I'd add there too is just like, I think it's important to understand that people are running MEV strategies today, even though this kind of auction infrastructure that Magnus is describing doesn't exist. So they compete over different dimensions, right? Instead of competing over their willingness to pay stakers and validators, they're just competing over their ability to send as many transactions as possible and as quickly as possible. And so you see waves of spam, you see some traders trying to vertically integrate with validators, you see them spamming some validators and accidentally taking them offline if they can come to an agreement to have exclusive access to their mempool. You see like private censorship agreements, all sorts of weird and I think bad things for chain liveness and also for stakers, because it's like, look, these people are making money. They're just pumping that money into AWS to run extremely low latency infrastructure for them. So the idea for Skip, right, is instead of pumping that money into AWS, you are not competing over spam anymore. You can pay to get into a particular slot in the block, and the people you pay are the stakers and the validators. And so now that money is still being moved, right? But it's being spent on the stakers and hopefully improving the token price of the underlying chain instead of just going to, Jeff Bezos.
Yeah, that's an interesting take, but I would really love to dive deeper into the IBC aspect. So, Mac, as far as I understood it right, IBC is kind of a non-profit technology that is very helpful for the Cosmos ecosystem, but with MEV, IBC as a technology could generate revenue, right?
Yeah, we think so.
Yeah, I mean, like, so the thing to understand about where that might come from is that IBC relayers sit in a privileged position where their whole job and the infrastructure that they run basically monitors what's happening on one chain and knows in advance that something is going to happen on another chain. And so like a bad version of MEV there would be if you see that someone is going to purchase a lot of an asset on one chain, you could try to front run them, right? And so that's the kind of thing that we might not want to allow. A better version would be something related to backrunning or creating a marketplace where these IBC relayers can also bundle with their transactions on the destination chain a transaction from a trader who's willing to pay them to get right behind where that transaction is going. This gets tricky at like the technical level with respect to, okay, who actually controls the ordering? Is it the relayer? Is it the validator? And like, how do you divide that tip across them and make it fair and sustainable? But there's definitely potential there, right? I think there are also some teams thinking about it from a slightly different perspective, but one that I also think is interesting around the IBC relayers basically moving liquidity their own liquidity in response to seeing where money is moving across their channels. So they might be able to LP a pool that's about to get a lot of activity in it because of something that they've seen. And so again, like the whole idea is, and I think it's really good that there are a lot of people thinking about this, is like, how can we actually make IBC relayers a sustainable business so it stops being something that only sort of very ecosystem aligned people do out of the goodness of their hearts.
Yeah, very well said. And but I want to roll a little bit back to the aspect that we discussed earlier regarding validators and how they could give like parts of their MEV revenue back to their fellow stakers. So I want to draw a bigger picture here. So lots of the APR that exists today when staking, let's say Osmo, for example, or Juno, and especially FMOS nowadays, comes from inflation. I think, Barry, you mentioned it earlier. So this is why the staking APRs are so high at the moment. But of course, the inflation will decrease at some point, and then we can just profit from network fees, so to say. But the network fees are not so high on Osmosis, for example. So there is kind of a conflict in the future where validators have to ask themselves, how can we, stay profitable? So would you say that MEV comes into play here, so that MEV basically becomes the new big aspect why validators stay profitable?
That's a good question. So, I mean, on some chains, like for example, Osmosis, there's tens of millions of dollars of MEV captured every year. All of that money is going, as Barry said, to AWS and then also to the bots themselves, and so the people running them. How that gets distributed is not up to us, right? That's probably up to, I'd say, a combination of the stakers, the validators, and also the core team at Osmosis, for example. But I think eventually what like the end state of that is that money can be split to basically incentivize a combination of each in a way that ends up being a stable state, where stakers feel like they're getting a good share in return for staking their Osmo or whatever other chain it is, their native asset. Validators feel like they're getting a share too for running the infrastructure that's so important to maintain the chain. And then maybe also like liquidity pools or even core teams can get some amount of it for sort of continued compensation. So how that split happens, I think, should be up to the community. We wanted to basically put that in front of governance and say, okay, what's the right split here? And I think everyone can understand how important everyone else is. But I think the worst version of it is that we either deny it or think it's not happening, or we just allow basically sort of third-party players who actually don't contribute as much to the ecosystem capture all of it.
Yeah, I totally agree with that. And speaking of that, I mean, on the one hand, it would be like super ideal for all these validators and infrastructure provider to profit from the MEV that also emerges because of them, because they are actually running the infrastructure. I think it would just be fair that also these kinds of parties profit from that. But besides, it was very interesting because very recently also Anatoly from Solana tweeted that the only way for a layer 1 coin in the future to capture value will be MEV. I believe you've seen this tweet as well. So what were your thoughts when you saw this tweet? And besides, is he right with that?
It's a good question. I don't know. I mean, I don't think anyone knows. But I think the reality is like MEV is going to be a part of the equation for a lot of chains, and it should be. Because MEV, like, people have a lot of definitions, whatever. Like the highest level, what it is some people are willing to pay a lot for particular spaces and blocks. Other people don't care so much. And then it's a question of where does that money go? And do you create the systems that allow those people to make those payments that end up sustaining the ecosystem? And I think that's going to be a big source of value capture for layer ones, but it won't be for all of them. I mean, there are a lot of chains that are figuring out ways to capture value that have nothing to do with DeFi or with the parts of the MEV or the NFT marketplaces that do have MEV activity. So like Akash, for example, like you can't do any MEV with Akash. They're just doing resource provisioning. But that's still a super interesting chain and a really powerful project that is capturing a lot of value itself by taking fees and by facilitating a marketplace that would otherwise be a lot harder to create. So they're capturing value because their network has value, not because of like transaction ordering. So I think like Anatoly is a very smart guy. I think if you spend more time in Cosmos, you realize that there are other ways that chains can capture value. I think it's one of the super cool things about the Cosmos ecosystem. But in Solana's case, I mean, maybe it will mostly have to come down to MEV. I think it depends on the chain.
Yeah, I think that's a good take. And now also Solana people, they are having a closer eye on Cosmos. And I think this is a very good introduction to the next topic. So why is MEV actually such a big topic in Cosmos nowadays? And besides, what is cross-chain MEV? So let's put the puzzle pieces together.
Yeah. Why is it such a big topic? I mean, when we first came in, no one was talking about it, and we sort of wondered why. And I think as we chatted to more ecosystems and et cetera, I think like people had a combination of like they were scared of MEV. I think there was like a perception it wasn't a problem. So like, why would you fix something that isn't broken? And I think part of what we did was we sort of prove that that's not true, right? Like MEV is a problem. So for example, when Terra was going down, we were in the middle of a hacker house where we were building out our prioritized mempool system and off-chain auction. And previously, sort of like the team had argued, okay, like it's not a big problem on Terra, etc. As sort of anchor liquidations were heating up during the DPEG to an incredible degree, and as there was so much arbitrage between Luna and UST, the MEV bots just went crazy, right? There were tweets from like the top MEV teams right as like everything was depegging saying like, what a time to do MEV and make a ton of money. Like people were making a lot of money during that time. And what happened was those bots were spamming the mempool so heavily that no one could get their transactions through, to the point that like the core team like called us and was or messaged us and said, hey, like, can we ship your prioritized mempool system as fast as possible since we can't get our own transactions through? I think like it's easy to brush off these problems of like a latency-based mempool and how MEV incentives incentivize spam until you have a much more clogged log of transactions and normal users are affected. And so like what we think about is, okay, like how can we design for the future? How can we design for a future where Cosmos mempools are extremely competitive, right? Where everyone wants to be in, where Osmosis has enormous amount of traction, where other chains have a huge amount of players and DeFi activity and NFT mints and all these different things. How can we build it so that it doesn't break like Terra did when that happens? How can we build in a way where there's all of the junk that happens when people try to capture these opportunities happens in a way that doesn't destroy the mempool for everyone else. And I think when you look at that, there's many ways, right? So I think chains can try to capture some of their own MEV by building their own bots. So like, for example, if Osmosis built its own arbitrage bots and then prioritize them, that will disincentivize competition and spam because people know they can't fight people who are at the top of the block because they're the chain themselves, right? So they won't have that incentive to fight it out. The other way is building a marketplace as sort of like one of the Skip products that the single chain client that also has the same incentives. So, I think chains can figure out, and we want to help chains figure out how they want to do it internally. We have the capabilities to do both. And then cross-chain, I think, is like a little bit outside of that question. It's just right now there's a lot, there are people doing cross-chain MEV. They're doing, swaps between, like we know of, we heard about recently, like, sandwiches between different chains. We're not entirely sure how that works yet, but in order to do cross-chain MEV, you have to have huge amounts of liquidity in different places, right? So like, if I want to do a Juno swap, like I was saying before, between Juno and Osmosis, I have to have a lot of both assets already sitting on each chain, because if I only have it on one chain, I try to bridge it over, by the time it gets over, it's probably gone, the arbitrage opportunity. So you have to have these sort of like idle liquidity pools. And also because there's no atomic guarantees of execution, you basically get a risk of one leg of your strategy failing. As you lower the risk and you get more towards atomicity guarantees, you basically increase the amount of people who can participate, because they don't have to have so much capital, because now they can start borrowing capital to do strategies because they're safer at lower fees, essentially. So that's why we want to that's how we sort of democratize the cross-chain MEV pieces, by giving atomicity guarantees. And, we're trying to work with teams who are really thinking about this quite closely. We can sort of enable anyone to participate in that. Hopefully that helps answer your question.
Yes, 100%. And what became very clear for me here is also that cross-chain MEV is a very, very young topic. So especially it became a big thing after the Terra meltdown. So what I would like to basically wrap this conversation also a little bit up, what I would love to know is like, what are your expectations? So how big could MEV, cross-chain MEV become in the Cosmos ecosystem, let's say in the next 3 to 5 years?
It's a great question. I think there's like a bear case and there's a bull case, right? The bear case is Cosmos doesn't grow and new app chains don't launch, or they launch and then peter out, and token prices don't rebound and we stay exactly where we are today. And where we are today, the market is relatively small, right? It's $20 to $50 million of MEV activity, which on blockchain scale is small. I mean, for individual validators, for chains, that could actually be a meaningful improvement in their bottom lines if we could transition that revenue from sort of searchers and in sort of cloud infrastructure purely to validators and stakers. That could still be a big deal. But like from a blockchain perspective, from a venture perspective, that's not a really big market. But if Cosmos doesn't grow, we probably have bigger problems. I don't think that's going to happen. Like Magnus and I are both super bullish on Cosmos for a lot of different reasons that we could talk about, but we know of a number of interesting protocols coming over from other ecosystems. We have heard of traditional fintech companies looking at building chains, and the first place they go to when they're thinking about that is Cosmos. And I think you're going to see a lot of that increasingly. And I also think like users on other chains are going to get tired of the sort of inconsistent user experience that you can have. But Cosmos has work to do in terms of improving our ability to validate chains and keep chains live and to protect risk when one chain goes down from other chains. But if we do a good job of solving those problems, if we do a good job of introducing MEV in a healthy way of figuring out how to incentivize IBC, I think you could easily see Cosmos grow 100 or 1,000 times in terms of transaction activity as well as potentially token prices, right? And then you're talking about billions and billions of dollars of annualized MEV. That would, it could be $100 billion, probably won't be for a long, long time, especially with interest rates doing what they're doing. But I think the realistic case is that within 3 to 5 years, if token prices don't rebound a lot, you're going to be talking about hundreds of millions or like $1 billion of MEV activity in Cosmos. And the question will be, who is winning those opportunities and where is the money going? And that's why it's important for us that we build Skip now during the bear, while the volume is low, while the number of searchers are relatively low. So then that infrastructure is in place to direct that money where it needs to go when it comes to the partners in the ecosystem who are securing the chains, who are users of the protocols, and who are staking to do that. So I think it's a good time. And that's also part of why I think this narrative is coming around now, because we have a moment where like, okay, Terra is not sucking up all the air in the room. And we can think about, okay, how do we get over the next 5 years and what does that look like?
Yeah, I think it really reminds me of DeFi, of the development of DeFi, actually, what you just said. Because also DeFi used to be super, super, super small when the bear market of 2019 or so kicked in. And then all of a sudden in 2020, DeFi emerged, and this actually catalyzed this crazy bull run that we have experienced 1 year ago or so. So could MEV be like one of these developments? Because like in crypto, the people always talk about we need to build something that basically gets us out of the bear market. Is like the accessibility or like the facilitation of accessing MEV, could this be one of these innovations that get us out of the bear?
So I don't think MEV itself would. But I think what we can do with MEV and to use it as an incentivization layer for basically incentivizing everything to work better, IBC relayers, chains themselves, core teams, stakers, I think can help a lot. We're really like first movers, right? In terms of like, I don't really think this narrative has come up to the degree that it has already. And I think now is the time where we decide as Cosmos, how do we want this to work? Like, we know it's here. We know it's going to get bigger. How do we want it to basically work so that we can all grow, right? Like teams can be incentivized and infrastructure can be incentivized. Stakers can get more revenue, which brings more people in. And that's sort of what we want to do, right? So we take a very different approach. We go chain by chain. We go, thought by thought, and we sort of decide, okay, for each chain, how does this make sense? While keeping an eye on like, how does this all work together? I think in an ideal world where you can basically submit a bunch of transactions and they just get executed cross-chain seamlessly in an atomic way, That's not only relevant for MEV, that can be relevant for a bunch of things to get better execution cross-chain and really sort of like tighten the group of these independent chains so that you have like much more fluid transactions between them. And I think that's essential for Cosmos to grow as sort of a constellation of stars that are also connected by like very strong highways. So I would say, you know, we take one approach to doing that, but it's obviously dependent upon all the awesome protocols and advances from other teams too.
Yeah, that's the only thing I'd add is like, my point of view is maybe a little bit blunter, which is I don't think MEV can get us out of the bear. I think MEV will help us be ready for the next bull. And as Magnus said, will help sort of align incentives between ecosystem partners. So there's more money sloshing around the ecosystem in the meantime to help us do it. But we need to sort of continue to build out new use cases for blockchains, continue to build out the other parts of infrastructure that will make them more reliable, make them cheaper to use, make them faster. And that's going to be something that sort of all of Cosmos is working on, and other ecosystems as well. And I think we'll see. I also think like, you know, the economy is just not doing super well right now, at least in the US. And so there's just a lot of external noise right now. But what we're finding is that also makes it a good time to build. More people are willing to come in and look at crypto and say, okay, like it's at the bottom, like I missed the last run, but I like want to jump in now. I want to start building something for the first time. And so I think it's an exciting time to be in the space.
100%. And indeed, what I really hear out of this is also that, I mean, like you're also a very young project, so to say. And also in order to, you know, to make MEV more accessible, and also that it, you know, can create, that it could catalyze another bull, as you described a couple of minutes ago. I think there's still a lot of development to be done. So could you talk a little bit about your roadmap? So what can we expect from Skip Protocol within the next couple of months?
Yeah. So if you go to our site now, you can already see a live demo of our protocol in action. We are ramping up our team. We have a couple people now, but we want to grow more. We've raised from what we consider to be the most ecosystem aligned players that we could find, who all sort of the shared vision of Cosmos growing and are all Cosmos maxis. We've also raised money from, you know, validators independently, as well as, you know, angels who like Jake Hartnell, Zucky, who sort of, you know, are very focused on Cosmos growing. And our roadmap is basically to deploy this single chain client within the next couple months. We're quite close, as you can see from our proof of concept, but we need to productionalize it. We have commitments on that from individual ecosystems. So like Juno, Terra 2, and others as well to deploy that within, you know, 6 to 9 months. And also we have commitments with validators. And so you can expect to see that marketplace come to fruition and grow over the next couple months. I think as we're doing that, we're conducting a lot of research on the cross-chain piece, but that's a pretty complicated problem. And I think it's going to be a couple people who come in to solve that together, both from the infrastructure side and the language side and the market making side and block space, you know, derivative side, all these different pieces that are required to figure that out. And I think that's probably going to come to fruition, hopefully within the next 2 years. But of course, we want to contribute to that. You know, most of the work that we do is very transparent, except for the parts that are, you know, private to the validator and things like that, and that we can't release public. But, you know, we take the approach of we want this to be a community effort to build this in the right way. We share information wherever needed. And, you know, we make sure that everyone's involved and in the room when we make decisions about this. At the end of the day, we're just trying to accelerate this and move things forward and bring the conversation up and have people start to participate.
Yeah. And just to piggyback off of that, I think what we're trying to do is very hard, and for a lot of engineers is a super interesting problem to work on. You have aspects of needing to build sort of on-chain protocols and needing to build infrastructure for validators and sort of getting into Tendermint, and you have aspects of needing to build serious off-chain cloud infrastructure and making that super low latency. And it takes a lot of skills, and we have to sort of build the team still. We're small, we're just 4 people right now. So if any of your viewers are engineers, are looking for their next project, we're hiring for a bunch of different stuff. Like if you have an engineering skill set, there's probably a problem that we're facing that you can help work on. So I just wanted to put that in there.
Yeah, 100%. And as always, guys, you can find all the necessary links in the description below after we publish this interview. But I think 45 minutes is a very good time. I have to say that I've learned a lot about MEV today. Also, I also got some new views on MEV. Very interesting to take on IBC here, Mac. I think this was also very interesting. So with that being said, thank you so much for joining on the panel today, Mac and Barry, and also thanks to you guys. And yeah, as always, all the necessary links are in the description below. Again, thank you so much, and I hope I see you soon.
Yeah.
Thanks.
Thank you.
See ya.